if gold rallied, 180% from there, say gold comes down to this mid zone, we could go 180%. I mean, we're looking at, you go way back up here, you're looking at like $8,500 gold. So there could just be this big hiccup that is going to catch a lot of investors off guard. And that's what I'm trying to mentally prepare people for, is we have the perfect setup and the feeding frenzy right now in this space that it actually looks like we're about to step into one of these sharp pullbacks. But this pullback will be, I think, the ultimate opportunity. Other people will say, well, yeah, it's still down here. And with inflation and all that stuff, silver should be like $150 or $400. I've seen some pretty crazy high pricing for silver. But silver will follow suit.
Back in 2008, gold flashed a warning before the world even realized what was coming. It had spent years moving sideways while stocks and real estate soared. Then it suddenly broke out, and months later, the global financial system buckled. Chris Vermeulen of thetechnicaltraders.com sees a familiar setup forming again. He notes that gold tends to follow clear technical patterns. Using Fibonacci retracements, he explains that after every major rally, gold typically corrects between 38% and 61% of its move before launching higher. Those zones, where price often finds support, have historically marked the beginning of the next leg in long-term bull markets. Right now, Vermeulen believes gold is approaching another key inflection point. Once this current surge tops out, he expects a healthy correction, possibly bringing prices down into the $3,300 to $2,600 range. It might sound steep, but he calls it a normal 30 to 35% pullback, almost identical to what gold experienced during past crisis cycles. What matters most, he says, isn't the correction itself, but what happens afterward. If gold reverses and builds a solid base in that zone, it could ignite the next explosive uptrend, one that mirrors the 2009 to 2011 run but on a much larger scale. Looking further ahead, Vermeulen projects that from that future low, a rally of around 180% could drive gold toward $8,500 per ounce. To him, the technical setup isn't just about charts. It's a sign that the same underlying pressures that broke the system in 2008 may be building again, only this time with far higher stakes. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Yeah, I mean, we can look at using Fibonacci retracement, which I love Fibonacci because it gives us, the whole universe pretty much runs on the Fibonacci theory and the golden ratio. So looking at this chart, this will give us a projection of what I think could happen going forward. So we had this gold traded sideways for a long time. This was back in 2006, 2007. During this time, stocks rallied, real estate went ballistic. Nobody wanted gold. It was boring. And then suddenly out of nowhere, gold started to run higher, and it was telling us something big and bad was going to happen in the economy, which it did. We had the 2008 financial crisis. Well, based on this rally up, typically the market wants to pull back anywhere between 38% and 61% of that move. And so this tells us, using Fibonacci retracements, when gold gets down into this spot, we should be looking for it to find support. So we can take that forward and look at the next kind of level here. We can go back and we'll just go right to where we are right now. Let me just zoom this out a bit. If we were to take a look at this last rally of where gold could pull back from here, depending where the top is, obviously, if gold does keep pushing higher, the middle ranges will move up as well. But at this point, it is saying we could see gold fizzle right back down into the 3,300, potentially all the way back down into the 2,600. And if we just grab what percentage that is about 35%. And interestingly enough, if you look at the 2008 financial crisis, gold actually pulled back. It was 34%. If we look at the previous sell-off and pullback here, it was about 44%. So we just need to figure out where, once gold puts a reversal bar in, then we can drop this on and be like, okay, this is where the next support level is for gold, where we could look at it. And again, if it drops down there, it could spend years building a new launch pad and working itself up before it goes higher again. So with that said, if we go back to the comparison chart of 2007 and 8, let's just look at that financial crisis. We saw the stock market crash. Gold pulled down 34% during that crash, but then gold shot higher and took off. So if we were to fast forward to where we are right now, I could see the stock markets starting to roll over and potentially having a big sell-off. And I think gold will eventually, I think gold's going to push higher for a little bit longer, but I do think gold will eventually pull back and it'll pull back to one of these levels that we just talked about. I think we could see it down towards that 3,300 potentially. And when it gets down to that level, it'll be very, eyes on the charts going, okay, let's see if it can build a base in reverse direction. Because once it does that, I think we're going to be something like this. It'll be the 2008 bottom. This huge multi-year run, I think, will be the start of the multi-year run for gold. So again, if I was to just draw this out, we could potentially, if gold rallied, 180% from there, say gold comes down to this mid zone, we could go 180%. I mean, we're looking at, you go way back up here, you're looking at like $8,500 gold. So there could just be this big hiccup that is going to catch a lot of investors off guard. And that's what I'm trying to mentally prepare people for, is we have the perfect setup and the feeding frenzy right now in this space that it actually looks like we're about to step into one of these sharp pullbacks. But this pullback will be, I think, the ultimate opportunity before it takes off. You and I talked about this probably a year or two ago. I've been talking about how when the stock market and the economy tops and we have a reset, gold is going to pull back and then it's going to have that big multi-year run. And so this is what I'm kind of waiting for. In fact, I'm very excited for the stock market to correct and a reset and for everything to do this, because after this, there's so much opportunity in the world, in business, in equities, in gold, in miners, once we have this reset. So that's my outlook on gold. And silver will follow suit.
Chris Vermeulen sees an eerie similarity between today's market and 2007. Back then, stocks and gold were both climbing, giving the illusion of broad strength. But gold's resilience was the early warning sign that the system was cracking beneath the surface. He believes that same signal is flashing again. Gold's recent surge, paired with growing weakness in equities, points to a looming correction or even a global financial reset. Right now, he calls it a feeding frenzy. Investors are rushing out of risk assets and into metals, chasing safety as volatility builds. Every time the stock market wobbles, gold spikes higher, jumping more than 2.5% in a single day recently. Vermeulen thinks there's still short-term upside left. He sees gold potentially pushing toward $5,000 and silver toward $70 to $80 before the rally exhausts itself. Technically, gold has already blown past its previous measured targets. The next major resistance, based on Fibonacci extensions, sits around $4,383, a level where momentum could stall before the next correction. But on a broader scale, Vermeulen says gold is now in no man's land, climbing in a parabolic arc reminiscent of the 1980s bubble. To him, this isn't a top yet, but it's the final stretch before a major inflection point. Let's get back to the interview.
If we take a look at the charts, we can see gold has just been rocketing higher. Really for the last couple of months. And we're in this phase now that's really exciting. I mean, this is what precious metals investors have been waiting for years. It's slowly been unfolding all this year. And now we're in this parabolic move in terms of gold, silver, miners, platinum, and palladium. They're all starting to really come to life. Gold's hitting all-time highs. It really doesn't matter what the stock market does. It doesn't matter if the stocks go up, if the stock market goes down. Money just keeps going into gold. And so now we're at this phase, actually. In fact, if we were to look back at 2007, on the left chart here is 2007. The stock market put in a top and it sold off 50% or 55% when we got into the correction. Now this yellow line is gold. And what's really, really interesting here is if you were to go just before the stock market peaked, which is where I think we're kind of right now, or on the verge of a massive correction in equities, as Gold right now is the flee to safe haven. We saw stocks and gold go higher, just like we've seen here on the right-hand chart where we are right now. Stocks and gold have been going higher. The fact that gold's been outperforming is telling us something big and bad is going to happen, probably not just in the United States or Canada, but more or less globally. And we're going to see a big financial reset. So gold is warning all of this. And what we're seeing, in the markets is this feeding frenzy. Now, gold is the favored play, same with silver. And now we're in this phase right now where the stock market is starting to sell off. And now when money flows out of stocks, and it's got to go somewhere. Money's always looking for a return. And so now every time we have a down day, just like you and I are speaking right now, equities are down. Gold is shot up over 2.5% today, which is a huge move for gold. And so now this is telling us where we are right now on this chart is very, very interesting, because what could happen next could be a very big reset in stocks. And temporarily, this is what I think is the last big push for precious metals before it stalls out. So I think gold and silver are going to continue to take the lead. They're going to pick up more speed and shoot higher for potentially the next few weeks. And where's the top in metals? I don't know yet, but gold could very easily run up to 5,000. Silver could run up, who knows, into the 70s or 80s, silver. But the stock market, I think, is on the verge of a big correction. And so money's going to start moving out of stocks and moving into precious metals even more so. So it's pretty exciting, this whole big scenario that I think is unfolding. Look at the charts. The last real measured move where we could get a projection of where price should go is we've already blown past that. So for example, we had a recent extra little trade that we put on when gold broke out of this large bull flag pattern. We got long. We pulled a little profits off here and we got the rest out right over here. So just based on this big chart pattern, we're now somewhat in no man's land in terms of the big stage of where the next level could be. Now, to zoom in, as you mentioned, we can get a little bit more of an idea of where the next short-term level is. So we could just say, well, based on this rally going up to this high, this is using Fibonacci extension, and this pullback. Actually, I need to go down to this previous reset right through here. If we base this last rally up and the pullback, it shows where that next upside move is for gold. It's $438 or $4,383. That's the next measured move where it's probably going to have a little bit of a pause or hiccup, or at least slow down for a bit. But other than that, when you look at the big multi-year monthly charts of gold, we don't really have any upside. It's now somewhat in a little bit of kind of bubble territory. It's just kind of going parabolic. And when we look at it, and especially when we zoom out to see what happened during the last major wave, actually, we can go back even further. Let's just go right back to the last one we saw back in the 80s here. You can see these are very big parabolic moves where things really just shoot straight up. And they kind of get dwarfed by the price in some cases. But all of these, they usually end pretty abruptly. But right now we need to figure out where it's going to stall out. And, everything in this space, the whole precious metals complex, whether it's gold, silver, platinum, palladium, or miners, they're pretty much almost all doing the same thing. They're going parabolic. And the problem with this is not like it's going to probably just roll over slowly and give you time to lock in profits. The problem with a parabolic move that goes straight up is they usually come straight back down once the feeding frenzy, once the momentum stalls. And, silver is actually a really good view of that. If we look at the silver chart, you can see how silver has spiked up each of these times. Both times they've sold off 70% or 35%. And, when we zoom into these charts, you can see it's not like you have time to get out. It's really the market goes up and then suddenly there's like a max exodus and it sells off very quickly. We saw the same back here when it did a last spike up into this level. So this is one thing I think investors are going to need to realize is, yes, this bubble is exciting and it's amazing to watch our accounts just skyrocket kind of day after day. But this usually comes to a very abrupt end. And unless you're really good at picking a top, which most people are not, especially in a bubble like this or as this feeding frenzy phase, you're going to have to accept that eventually, if you do plan to get out, you're probably going to give back a good chunk of that because you're not going to know the trend has turned until you get a big long red bar. that says it's a reversal. And if you try to time the top, you might get out now and then realize it just keeps rocketing higher. This is the problem, right? You have fear of missing out on gains, but then you have fear of taking a loss or giving back gains. And that's what makes this situation like very, very unique.
Markets often whisper their secrets long before the crash is visible, and gold has a habit of being that quiet messenger. What's unfolding now feels less like random price movement and more like a stress test of the global financial structure. Every surge in gold isn't just a trade, it's a reaction to something breaking beneath the surface. The flood of liquidity over the past decade, the ballooning debt, and the widening cracks in confidence have all built a backdrop where gold once again becomes the truth teller. If Vermeulen's framework holds, the next few phases in gold's movement could chart not only a market correction but a broader reset in how value is perceived. What makes this moment unique is the scale. Debt levels are higher, currencies weaker, and the margin for policy error razor thin. Whether gold pauses, pulls back, or charges ahead, its message remains the same. The system is straining. And unlike 2008, this time there may be no easy way to paper over the damage. If gold does become the center of the next financial reckoning, the question isn't how high it will climb, but whether the world is prepared for what that rise will reveal about the fragility of everything else. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.